How you doing, betters? How you doing, Michael Aotearoa? Can you guys hear me okay? Okay, so okay, great. Thanks, guys. Appreciate it. Thanks for the input. Okay, so it's a pretty interesting time with Jerome Powell making his rate cuts. So I think we're gonna have to give credit where credit is due to Michael Pinto. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Thanks for being here. I know it's probably nighttime where you're at, so we do appreciate you being here. And if you do have the time, would appreciate if you do subscribe to the channel and do be sure to click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We appreciate your support, especially since it looks like we may be having David Stockman coming up in a couple weeks, and I think we may also be having Rick Rule. So do subscribe and so you can be notified on new updates. So click on the bell. So once again, we did see Jerome Powell make a small rate cut, 25 basis point. President Trump wasn't exactly all that happy, but first things first, as I mentioned, we got to give credit where credit is due to Michael Pinto.
My data shows us a 100% chance of a 25 basis point cut, and a little bit less and about what you said about 50 basis points, about a half percentage, 50% chance or so, but 50 basis point rate cut, 100%. So on Wall Street, if they don't cut rates on July 31st, then it's going to be a bloodbath in the stock market. Absolute bloodbath, in my opinion.
And he got it right, Michael Pinto. Bravo, my man. Good deal. Good call. Okay, so let's see who's checking in. Lieutenant Colonel, how you doing, sir? Hope everything's going well. Semper Fi. Michael Altero, yes, again, thank you for being here. Betters, thank you. Richard Thompson, thanks for coming here. Don't think I've seen your name before, so welcome aboard. Paul Hunt, welcome aboard as well. Christian Liberty, welcome aboard. I don't think I've seen your names before. PM Ruckus, aloha, Patrick. Aloha as well. Got to make sure things are going okay up on the mountain. I know there's a lot of issues going up on the volcano up in Hawaii, which is used as an observatory. A little bit of a disagreement between our local customs and again, government more or less trying to make some money and squashing local culture. So we'll have to see how that plays out. But okay, so again, we saw some pretty good news from Jay Powell cutting rates. And we'll get into that. I think we're going to spend most of the time on it. Rawa Rasputin, thanks for being here. So first things first, let's go ahead and take a look at our webpage, and we'll see how gold and silver are doing. Sorry about that. So markets have opened up in Asia, and again, our 10th year anniversary. So we do hope that you guys will actually sign up and be a member with Silver Bullion or open up an account with us. When you do, you of course you can have newsletters, or we'll send out newsletters and let you know what's going on with the industry. In US dollars, silver 16.25, gold 14.44. So silver's about the same, gold small bump. When we take a look at the ratio, it's at 88.9. So silver did have a nice short run. We got in the 86 range, and it's back to 88. So if it's anything like the last time, I think we'll have to see gold establish itself first, and then silver will follow, and then it'll follow a lot quicker percentage-wise to close down that ratio if it does the same things as it does before. So we'll have to see if it plays out the same way this time. Min Chin Xiao, things are fine here in Singapore. Everything's well. Nice, stable government. Things are clean, convenient, efficient. So no complaints here. Shane Clemens, kia ora. How you doing, my friend? No volcanoes in Christchurch, just the occasional earthquake. Yeah, I hear you. Christchurch every now and then can get some pretty big rattlers. So hang on tight whenever that happens. Uh, No Town Mystic, New Orleans. How you doing? How you doing from New Orleans? I think it's first time I've seen you as well. So welcome, welcome aboard. Uh, Richard Reed, San Francisco. How you doing, Richard? I think first time as well. Welcome aboard. Welcome aboard, Jeff Vegas. Buy silver like there's no tomorrow. I hear you. I hear you, my friend. Definitely get silver. Philip Quinn, howdy. How you doing? Good for gold, silver prices from betters. Absolutely. Absolutely, it is. Uh, One more thing though, we besides opening up an account, you may also want to. We do have on Telegram SB Crisis Tracker, so you may want to add that to your Telegram group or join us anyway. If you do have the app Telegram, Telegram is similar to like a Viber, similar to like a WhatsApp. It's that type of a deal. And what we do is every now and then, or I should say every day, not every now and then, when we come across some news, we'll put it up here, um, just to give you guys a heads up, maybe on some of the things that you missed, and then if there's things we missed, I mean, be sure to let us know as well. So we do see things where central banks again are buying a whole bunch of gold. Um, we are seeing real estate, commercial real estate is in a bubble. I think we already know that we're in the everything bubble, right? But again, SB Crisis Tracker, do join it. It's a Telegram group once again, so we hope that you do come on board as well. Okay, back to the chat. Visited Singapore back in March. It is indeed one of the best places to live. Thank you, Min Chin Xiao. Where are you from originally? Singapore. I mean, every place has, of course, it's good and bad, but I think if we go back to our meter thing, which we always use, it's definitely pointed more on the side of stability, more on the side of convenience, stable government, and I think that's what people are really looking for. Plus, again, in a clean, convenient place. So Singapore, it does very well for itself, and government, it does a good job. I'd have to say it does a good job. Boyce Ulmer from NC. How you doing, North Carolina? Wolfpack, Tar Heels? Raymond Wright. How do USA folks cope with 28% capital gains tax on selling physical with distributor margins near 7% on the buy? Well, I think the premium, that's always going to be there for gold and silver. But I think we're seeing more and more guys. To answer Raymond's question, more and more guys they are understanding that having a 401k that is open or exposed to paper markets, it's not a bad idea to consult, with an administrator on how to get some of that 401k into precious metals, where again it's tax free. So there are some ways to do it. 28%. I don't see it that high. Maybe it is. Maybe it's not. I'm not quite sure on that though. Um, but there's quite a few ways to do it. Uh, Shane Clements. I'll bet Singapore is getting some of the richest refugees. Well, if you're talking about Hong Kong, I tell you what, they are, of course, naturally getting concerned, and more we're seeing people like Kyle Bass who are saying, if you do, have, I don't want to start a fear factor thing, but it is good to have options. And as we say, the three Ds here, when it comes to diversification, it's diversify your assets, diversify your location, and diversify your skill sets. Meaning, learn some carpentry, learn some plumbing, whatever it is, because if things do really go bad, if you do have that type of skill set, you're definitely going to be in demand. So the 3Ds, just try and keep that in mind. Okay. Um, Lieutenant Colonel, no 28%. Where did he get? Yeah, I'd have to agree. I'm not sure where 28% is coming from. Um, okay, so some things in the news. We we came across this article from Deutsche Bank where basically they are saying that. Hang on, I think a video is gonna open up here, and I don't want it to mess things up too much. Okay, so anyway, let's hope it doesn't play. So this article titled "How Negative Interest Rates Help Turn Deutsche Bank into a Disaster." Okay, so let's see what they're gonna say. Deutsche Bank, once a superstar in Europe, is now a disaster. Germany's biggest lender is rapidly slashing jobs. Yeah, that's pretty big news. I think most of us know that. Deutsche Bank seems to be in the news and almost always for the wrong reasons. It's losing a ton of money and the stock is trading near all-time lows. Yeah, I think we're definitely below 8, right? I think we went back below it again. Many of Deutsche Bank's problems are self-inflicted. It's been badly mismanaged. Deutsche Bank never fully cleaned up its crisis-era balance sheet. Oh, in fairness, I don't think anyone really cleaned it up. They basically just smoothed things over and continued on and kicked the can down the road. Uh, continuing on. But Deutsche Bank struggles have also been amplified by something the 149-year-old lender never imagined, mostly because it never happened before in modern history, negative interest rates. That is true. I mean, a lot of times we keep hearing people say things are going to fall apart, things are going to collapse, and then they will come around and say, well, we never had negative interest rates before. I never imagined that we would have pulled into negative interest rate corner. So, okay, I'll buy that. If that's what the bank is saying, I'll buy it. In 2014, Central European Central Bank wanted to boost the sluggish economy, but interest rates were already at zero. And the unconventional decision to take them into negative territory was aimed at encouraging growth and avoiding deflation, but it meant banks were charged a fee for parking their reserves with the central bank. So up until that time, it wasn't depositors, it was the banks that were taking on that negative interest rate. The ECB's extreme policies may have injected some life into Europe's sleepy economy, in turn giving Deutsche Bank and other lenders a boost. However, negative rates are also crushing the profitability of all banks, Deutsche Bank included. And this unorthodox policy, one that the ECB is on the verge of doubling down on, is making it awfully difficult to revive the champion of Germany's banking system. Negative interest rates have been another nail in the coffin. That's some pretty strong words. Negative interest rates have been another. So when he uses that word another, kind of tells you there's other things going on. And although all banks in the Eurozone have been subject to ECB's extreme policies, Deutsche Bank's business model and precarious balance sheet made it particularly susceptible to this pressure. Negative rates did not cause Deutsche Bank's troubles, but they absolutely magnified them. So I think we'll stop there. We kind of get the gist of the article. Negative interest rates. Nobody even knew what that was before, and all of a sudden here we are. I mean, I remember my economics, finance classes. There was no such thing, negative interest rates. So I'm wondering what the colleges and universities are teaching today, how that factors in. Okay. Back to some of your questions or comments. Cars are also very expensive. I heard you need to buy the right to buy a car. Rara, yes, he's talking about Singapore. Very expensive to buy a car here. I think it's one of those things where the public transportation transportation system here is very good. Buses always efficient on time. The trains, the MRT always efficient, always on time. And so I think a car becomes, I'm gonna say it, a privilege. It's a privilege to own a car in Singapore, and there is a heavy price tag to it. I can't comment for the government, but people do speculate it's because they don't want too many cars on the road. They want to limit traffic, so this is one way they will try to put a barrier from too many or having too many cars on the road. Again, I don't know if that's exactly their policy, but when you just in general conversation, that's typically what you hear. Um, yeah, it's their way to control the car population. Okay. Thank you, Vincent. Let's see. How much silver should I own or gold for that matter, Ian? Um, Good question, Ian. Because when you're talking gold and silver, I think it's fair to say you're talking generational wealth. It can definitely be passed on from generation to generation to generation. So it's something you really don't mind just accumulating through the years if you're going to pass it down. If you're looking at this whole scenario where there's going to be a fiat type event, you definitely want to have enough to get through that transition, as we say, from the current monetary system to the new monetary system. You definitely want to have enough through that transition. And you want to have enough to pick up opportunities along the way, because even though it sounds dreary, the thing is, opportunities are going to pop up and they'll be there for you. So you do want to have a fair amount. For myself, I'm looking at 6 months worth of salary just for the transition part. So whatever your salary is, have 6 months worth in gold and silver for that transition from the current to the new monetary system. That's just for myself. And then of course I would like to have gold and silver to pick up opportunities along the way. And if you're still for the generational wealth part, for the wealth preservation part, those are things for myself if I were back in the US. And because I know now how Singapore works, I know now how silver bullion works, how the vault works, and just how properly things are done. If I were back in the States, I would keep those things with me. But the rest, for the wealth protection, things like that, I would, now that I know what I know, I would keep it outside of the US. Simply because it's the US is going to go through the chaos probably a lot more than any other country. And the way Singapore is with its stability in the government, a trust factor where the government knows the key to survival is not necessarily the right word, but one of the keys to the strengths of Singapore is its truth and transparency, and that is something the government will never compromise. And so, like I say, now that I know these things, if I were in the U.S., I would, when it comes to the wealth protection part, I would keep that outside of U.S. jurisdiction. I know not everyone feels the same, but that's just my opinion. Uh, Pablo, how you doing? Hola. PM Ruckus, negative rates do not make sense. You are paying to have someone take your money. You know, PM Ruckus, up until now, it wasn't you and I, it was just the banks. But this article that came out recently from Zero Hedge, it's a game changer. It's a game changer. UBS to start charging rich clients with negative 0.75% interest rates. Okay, so they're going after the rich first. Now we're talking clients, where before it was just basically the banks. Now we're talking you and me. Well, if we were rich, they're talking about us, but they're talking about the individual now. So let's just read a bit into this article. For years, European banks were leery of passing on the ECB's negative interest rate to their clients for fears of deposit flight and other unintended consequences in the process, being forced to eat the difference and impacting their interest income. So again, as we mentioned, it before prior it was the banks, but now they're starting to shade over into the private individual. However, after 5 years of NERP, negative interest rate policies, and with the ECB set to unleash even more negative rates in the immediate future, one bank, UBS, has finally taken a stand. According to the Financial Times, UBS plans to charge a negative interest rate on wealthy clients, those who deposit more than 2 million with the largest Swiss bank. Okay, so that's still pretty hefty. A lot of us more than likely are not going to fall into this rate or this range. But while several, mostly smaller banks in Switzerland and the Eurozone already pass on the cost of negative official rates to corporate depositors, most large players have refrained from doing so with individual clients. But with the ECB expected to adopt a lower for longer stance, that Japanification coming on there, stance as soon as the next central bank meeting starting in November, UBS Switzerland will charge a negative 0.75% rate a year on individual cash balances above 2 million Swiss francs, the same as the Swiss National Bank's rate. The move, as the Financial Times notes, underscores how banks in Europe and the US are scrambling to prepare for a protracted spell of lower rates that threatens their profitability, having previously wagered that central bankers would tighten monetary policy. Let me skip this one here. A year ago, everyone thought interest rates would go up. Now it doesn't look like that. To prevent the inevitable howls of rage from wealthy clients, aka pissed off customers, who will soon see their total savings shrink by 1% or more every year just to hold their money in the bank, UBS relationship managers have started discussing the forthcoming charges with some wealthy clients and are preparing to issue a letter outlining the changes. Some of the bank's smaller rivals, such as Julius Baer and Pictet, already charge some clients with large cash deposits. Um, all in all, I think this last portion of the article is the most telling. Um, yeah, here we go. It's the last sentence here. Sorry about that. So for now, keep an eye on cryptocurrencies. Last we checked, there was no cost. So if you're in cryptocurrencies, there's no cost to hold it. That's what they're saying, and no way to impose punitive rates to keep one's savings in Bitcoin and its peers, which should have obvious consequences on its price. So, okay, maybe that's another reason to hold cryptocurrency. You avoid negative interest rates. Uh, but one thing I will say, when we came a couple of years ago, I think it was when Bitcoin had its really big rise, and I'm going to say it, I feel the miners took advantage. Um, they really took advantage. Transaction costs, they were quite a bit higher. Um, Hopefully this time around, when Bitcoin does rise again to that same levels, we're not going to see, and I'm just going to call it the greed kick in, where miners start to charge a hefty, heavy price for each and every transaction that goes on. Okay, back to some of your live chat. Uh, let's see. People think I'm crazy when I talk to them about a financial crash. Carl Potorti, welcome aboard. I don't think I've seen your name as well. Hey, welcome to the club, my friend. My family thinks the same. It's a lot of people. I can tell you in Singapore, a lot of people do hear about it. Some do understand it. Very few talk about it, and we see this in the shop where someone will come in, and then if they start to talk about these fiat events and things that can possibly happen, and because we're pretty familiar with it also, if when you converse with them, there's a bit of ease, like-minded people type of a thing. And it falls into what you're saying, where it's hard to talk to people about it, and you just never know their reaction, and probably 9 out of 10 are going to think you're crazy, or sorry brother-in-law, but like my brother-in-law, he's a banker. He absolutely cannot stand gold and silver. He's all into yields and making money here or there, all over the place, wherever he can with fiat. So I'm not going to mention my brother-in-law's name, but I only have one that's a banker. So I guess the rest of the family will know who it is. But yeah. So I talked to him about gold and silver, and he it's because I think he doesn't necessarily see the insurance aspect of gold and silver. Because when you tell people invest in gold and silver, they'll pull up a chart and they'll look and they'll basically see it just going downhill, and they'll tell you what kind of investment is this. But typically, when you get that response, you know it's a person that does not fully understand the other side of having gold and silver, which is the generational wealth aspect, which is the fighting off inflation aspect, which is the insurance aspect. If things start to go bad, it preserves your wealth. So a lot of people, they made good money, so it's hard for them to see the other half of it because they did well. But you're gonna get that. Just stick to stick to what you see. Yeah, I mean, like I say, when these things happen, we're all either going to be a blessing or a burden. So do what you need to do to be that blessing for yourself, your family, and your friends, and we'll see what happens. I mean, nobody wants to be right in this situation where, yeah, gold is 10,000, I told you so, but the world is completely fallen apart, right? So it's a difficult thing to explain sometimes. Um, let's see. Standing skeleton, Rand, how you doing, my friend? The borders have complicated that, but it's surging. The USA Canada Mexico trade pact is huge. Yeah, I guess that's the redo of NAFTA. I remember when it first came out under Clinton. Sorry, I may not be taking it in full context. I'm just picking up on one section. But I remember when Clinton first, I think it was Clinton first came out with NAFTA, it had a lot of headwind. It just felt like what's going to happen to the U.S. I mean, you got Mexico to the south, who's a low cost producer, which is going to impact U.S. and Canada to the north. I'm sorry, Canadians, but I don't know exactly what Canada would have done. Well, maybe timber production, things like that. Um, maybe gold, silver. Who knows? But we've seen it before where these multinational trade agreements come in, and it doesn't necessarily benefit you to the fullest. It's more like a, at best, a compromise between all nations, and some nations are going to have things better, some nations are going to have things worse. Other nations, they'll settle for being protected by this umbrella of sorts if they do join these types of organizations. So everyone has a different story. Pat Wright, cheers from SoCal. Hey, how you doing? How you doing, Pat? Thanks for being here. Uh, let's see, Foxborough, Massachusetts. Hey, you're up pretty late, 9:30 there, I think, huh? Patriots fan, I'd assume. I'm gonna assume. Um, let's see, good response. You're welcome. Love the show. Thank you, Gabriel. First time I seen your name as well. Welcome aboard. Okay, so we had those two things, from Deutsche Bank talking about negative rates, and then we had UBS saying now they're going to charge their clients negative rates. But what about you? What are you going to do if your bank starts to charge negative rates? So I'm curious to see what you folks say. Um, Go ahead and feel free to give your opinion, what you may do. For myself, I'll start off, and I would say if I had a bank account, I am pulling out most of my money. There would be no point or much of a point to keep it there. If it was a business account, that's a bit different. You kind of have no choice. Um, if I had to wire, let's say, a large sum of money, I may have to go back into the bank to wire it. pay all kinds of fees. But what I might do instead is, if the person I'm transacting with is into crypto, I may just buy crypto and send him crypto as payment, or whatever for that transaction would have been. So if a bank were to start charging me negative rates, those are some of the things that I would do. So curious to see what you guys would do. Bubble Bill sold us to River James, huh? Okay, Min Chin Xiao. Singapore dollar is probably one of the more stable fiat currencies. More than likely, it's because it's a basket of currencies that make up the Sing dollar, and that helps to keep some stability and I'm going to say even credibility in the world, because it is made up of a basket. And I think last I remember, that basket is it's not exactly known by the public. So who knows what's in it? I'm sure it's definitely not the Zimbabwe dollar, for one thing. But Jeff Barber, how you doing? I'll change banks with negative rates. Definitely, it's going to be tough, because at that point, negative rates. How do you save money anymore? You can't save, because the bank is essentially and effectively telling you, uh, we don't want you to save. We want you to put your money back in the economy and keep things going. How can you save at that point? You put money in, and the bank siphons it out. I mean, they already have pretty good fees for everything under the sun. What more do they would they want? Um, okay. Live chat. See what else is going on. Ross Perot called it the whole way with that sucking sound. Remember that, right? I think everybody remembers him. He died recently. I think it was 80 something. He died. I don't know if it was earlier this. I think earlier this year. Ross Perot passed away. Um, I did not know he looked a bit aged when he first ran, and I didn't know he was that young at that time. If he was only, I think, 85 now. So, but Ross Perot would have been interesting to see what happened if he got in. Rah, all banks will do it. There will be no point in switching, possibly. Stacking Kid, how you doing, buddy? Cryptocurrency has a short lifespan, especially since it can take a hit. No predictions of the result of loss. Um, that is true. It's a bit volatile right now. For that reason, it's hard to consider it money, but it is currency in a sense that people will trade for it, people will accept it. So, by definition of sorts, it is a currency. We have to look at it that way. And if negative rates do come into play, cryptocurrency is it's an alternative. It's I don't know if you would necessarily want to park your money in cryptocurrency because of the volatility, but I think if you had to make payments, you could, and if you had to buy some, you could. There's things like Bitcoin ATMs, cryptocurrency ATMs all over the place, where you could easily go ahead and slip some money in the ATM, and next thing you know, you have some crypto in your wallet, and you can go ahead and transact that way. So let's see. PM Ruckus, we need a major crash to eradicate the silly Keynesian crap from our monetary system. Be careful what you wish for, because there are a lot of other guys who are pushing MMT, the modern monetary theory. So we need to be careful on this. Australia is trying to ban cash in preparation for negative rates. Yeah, that I'm a fan of cash. I mean, I think we should have cash. It actually does provide you some freedom in some ways when you do hold cash, and even when you hold gold and silver. Um, JLU transact over 10,000 cash. That's a strange thing with banks. I mean, they are really cracking down on on limits, where they're watching you if you have bigger amounts of cash either being deposited or moving around. Um, so anyway, all of these things leading up to the infamous end game, and Zero Hedge had an article on that, and they're calling it 2024. Starting in 2024, all U.S. debt issuance will be used to pay only for interest on debt. That's pretty harsh. Pretty harsh to hear that we're not going to be paying down the so-called principal anymore. But while it's common knowledge that the U.S. budget deficit is soaring, even though the U.S. economy is allegedly growing at a brisk mid 2% pace, and yet the Fed is about to cut rates, which it did, resulting in recurring bond trader nightmares about funding the growing twin U.S. deficits, budget and current accounts. What few people know is the increasingly ominous composition of this budget deficit. All this part's pretty technical, so bear with me. But as Zero Hedge first pointed out back in March when looking at the U.S. so-called income statement, most concerning by far is that for the first 4 months of fiscal year 2019, interest payments on the U.S. national debt hit 221 billion, 9% more than in the same 5-month period last year, with the rate of increase breathtaking. As a reminder, according to the Treasury's conservative budget estimates, interest on the U.S. public debt is on track to reach a record 591 billion this fiscal year, more than the entire budget deficit back in 2014 or 2015, and equates to almost 3% of estimated GDP, the highest percentage since 2011. We know what happened in 2011. In fact, as of June 30th, U.S. interest had already surpassed 600 billion. And this is shown right here by this chart, 600 billion. Here we are. Um, Not good. Okay, this is not good. Um, what it's really saying is, as I'll continue reading, as part of today's Treasury presentation to the Treasury Borrowing Advisory Committee, there is a chart showing the Office of Debt Management's forecast for annual U.S. debt issuance, broken down between its three component uses of funds: primary deficit, net interest expense, and other. Okay, so what's the other, right? That chart is troubling because since while in 2019 and 2020, surging U.S. interest expense is roughly matched by the other deficit components in the U.S. budget, these gradually taper off by 2014 and, in fact, in 2025 become a source of budget surplus. But what is the real red flag? The real red flag is that starting in 2024, when the primary deficit drops to zero, according to the latest projections, all U.S. debt issuance will be used to fund the U.S. net interest expense, which, depending on the prevailing interest rate, of course, that's going to come into play. Depending on that interest rate between now and then, will be anywhere between 700 to 1.2 trillion or more. So we have this chart here, and here we are, 2024, in this red rectangle here. Basically, what this is showing is this blue here, the primary deficit. Okay, we're not going to be paying off that primary deficit much anymore. The majority of it, I mean, just about all of it is going to go to interest. And as the years continue, we're going to be paying less and less and less and less and less of that primary debt, and more and more and more and more and more of just the interest. So it's pretty troubling when you look at that. And so this little chart here, hedge finance, speculative finance, Ponzi finance, Minsky moment basically is when everything is just going to fall apart and fall apart rapidly. And in short, in the stylized cycle of the U.S. Minsky moment, the U.S. will enter the penultimate Ponzi finance phase, the one in which all the new debt issuance is used to fund only interest on the debt, sometime around 2024. Nice to know we have a Ponzi government, I guess, huh? Okay. All right. So where are you guys at? SP 500 is going down. A lot of people expect it will. Shane Clements, little people are easy targets in the cash war. A good look at banks, international accounting firms, and easily bought politicians would get the best returns. Yeah, it's sad to say, but it's gonna. I mean, it's more or less always been that way, but I think it's gonna be magnified a whole lot more. Pablo Pina, gold in Canada hit 2011 highs. I've been hearing that. Um, it's just in a lot of currencies, gold is doing well. It's just I shouldn't say just, but in the U.S. dollar, it hasn't gotten there. But in a lot of other currencies, it's doing very well. Standing skeleton, Randy Frushauer, long name. President Trump is restructuring the commercial side of America and expands the partnerships and motors, the business collections, but he's not assumption really we're growing the economy. I mean, I think the US economy relative to the rest of the world, and we're hearing this phrase more and more, relative to the rest of the world is okay. Just okay relative to the rest of the world. I don't think that's I mean, how much stock can you take in that, right? Is that supposed to be something on the positive side, or is it something where either the US is going to join the rest of the world? Is that more likely? Or is it more likely that the rest of the world is going to come back up and all have great economies? If I had to bet on it, I'm going to say the US is going to join the rest of the world. Looking at that little meter again, I think the US is more likely to join the rest of the world where economies really do hit a downward spiral. Okay. Um, let's see. Hastur of Carcosa, first time I think I've seen you on. Welcome aboard. Banks charging negative rates will keep me at a minimum balance. Me as well, I agree. Just enough to pay fiat debts with fiat notes. Agree. Paying empty banks with empty debts, empty debt notes. It's quite poetic. Yeah, I guess you could. I like that. I guess you could. I'm gonna have to borrow it. I guess you could say that. Restructure and then I think take down. Pat, right? Yeah, it seems that way. I don't know if they're really restructuring to try and soften up the landing, or if they're restructuring to legitimately, have one good swing at the plate to try and get things back online and in order. Um, will flow when the tide goes out. We'll see who is swimming naked. Won't see me swimming naked. Better for all of you guys too. Okay, let's see. Trump's wall won't save the booming economy from the global slowdown. Yeah, I think that's a separate issue though. Um, but it does seem that the Fed, they are financializing so much on just about everything. And last week we had Charles Hugh Smith. If you didn't get a chance to watch the interview, and I hope you do, the way Charles approaches things reminds me of Chris Martinson, Mike Maloney in some ways. Very straightforward, open-minded guy. He sees a lot of different paths that things can play out. So he's an author, I think, of over 10 books. I don't know if it was 14, could be 14. And very opinionated guy, but he has a good grasp on what's going on. So I'll roll a short clip from last week's interview with Charles Hugh Smith.
And we ask, well, why? What happened? And of course, as you've discussed with many other guests in the past, the U.S. and in fact the world went off the gold standard and went totally to a fiat currency system. But more recently, like why was what's happened in the last 20 to 25 years is the central banks have created this financialization as the foundation of wealth now. In other words, your access to cheap capital,
Yeah.
like credit, and your access to leverage. And this is how wealth is accumulated.
Okay, and financialization of a lot of things. And we kind of got on that when we were talking about my family home back in Hawaii, and I see you there, Elbow Sanchez. So Aloha, how you doing? You're late. You must be on Hawaiian time, right? No, but anyway, sorry about that. So Charles and I were talking about housing prices and the financialization of everything, where it seems like the only way to get rich nowadays or to get ahead is you first have to go into some sort of debt, and sometimes you make it out and sometimes you go in a bit deeper. But we were talking about home prices, and the way it seemed, it's like our parents' home, my family home, my mom and dad bought back in 1971 in Hawaii. It was 17,000 US dollars. Unheard of, right? I mean, and then a couple of you guys chimed in, one from New Zealand and I think one from Australia, and you guys had more or less gave the same situations where houses back then were very cheap. And so I went and took a look at it. And when I looked at the Australian prices, and it's interesting because this yellow vertical line or this yellow block on the right is after 70, 71. I couldn't get it exactly to be that date, but let's just say 70, 71, somewhere around there. So prior to 70, 71, you can see it's just slow, slow and steady, slow and steady, nice and steady, slow and steady, nice and steady. Okay. Then I looked at UK and I saw the same thing. So this yellow line again is at about 71. Prior to 71, low and steady, low and steady, low and steady, but it's a steady rise, nice and easy, nice and steady. And then all of a sudden it takes off. Okay. So we've seen this in Australia and we see this in UK. And then I went ahead and took a look at US. So here's 71. Prior to 71, again, low and steady rise, nice and easy, just steady, steady, low and steady, nice and easy rise. And then after 71, it takes off. Okay. So here we are in the US, 71, it takes off. UK, 71, takes off. Australia, 71, takes off. So, uh, question really, the question is, it has to be now, what happened? Why was there slow and steady growth, manageable growth, and then all of a sudden things just took off? So what do you guys think happened that more than likely caused the price of homes and everything else to take off after 71? Okay, I'm going to look for it. I'm going to see if any of you guys, if you had the same thing that I was thinking of. Um, there you go. Full name, off the gold standard. And that's exactly what it was. Elbo Sanchez, same thing. Nixon took the world off the gold standard. Yeah, so once it happened, it money printing could happen without the worry, or without the worry of having to be based against gold. They printed money, free to do whatever they wanted to. Basically, at that point, printed a lot of money, and we saw inflation. We saw inflation, and we've seen home prices rise. We've seen everything more or less rise, and another thing we saw, because of this going off the gold standard. And I'm going to say this. Some of you may not agree with me, but I'm just going to throw this out there for you guys to either give a thumbs up or thumbs down on. But another thing that happened during that time was we saw moms had to leave the home raising the children, taking care of the kids, and they had to go to work because dad's paycheck wasn't enough anymore. And so both mom and dad had to go to work, and the kids, there was a term that came up during that time called latchkey kids. Come home from school, mom and dad not there, make your own food, go ahead and goof off, whatever it is. No parental supervision, and now we're 2, 3 generations out. So I don't know if that actually had anything to do with the way we kind of are today sometimes. But I think when we lost, especially mom being at home to take care of us, of course that's going to have an impact. So when we went off the gold standard, not only did it cause inflation, but I think in some ways, it started to take apart the family in some ways. And I say that because, like I say, mom wasn't at home anymore. So that was maybe a unintended consequence. But I mean, yeah, some families are fine, but other families it got really difficult. Where kids have to kind of raise themselves at times. So I just want to kind of throw that out there and let you guys kind of discuss that. Um, Thanks, Richard. Okay, we know the answer. That was me. Gold. Okay, latchkey. Yeah, latchkey kids. Um, Now Grandpa Wooflo. Now Grandpa got to go back to work to eat. Hey, well, there you go. Now even Grandpa's got to go back to work. Okay. Um, I guess yeah, that can fall in line with that. Uh, G Bob's burner. I know I'm not pronouncing that right. Any metal coin is more valuable than a dollar. Nickels are looking good. If you think about it, a dime, a quarter, even a metal washer. We use brass coins locally, admittedly, and not very much, but enough to make it worthwhile. Yeah, I think even pennies. I think if you go back to 1982 and prior, they had a much more higher copper content. So if you can get a hold of some of those older coins, pre 65 or 1964 and prior, quarters, dimes, nickels, um, if you can even get, I think it's 82 and before copper, it's the real deal. They have real metal in them. I think even Kyle Bass, I forget how much millions it was, 1 million or 5 million or something, all nickels, because he knew that the nickel in the nickel coin was worth more than the nickel coin. So I think he got a whole bunch of nickels, and I think it's made him money. But that's Kyle Bass. But another interesting thing was when I went back and looked at James Rickard's book Aftermath, because we had this rate cut. This was some of the notes I took: lowering and zero interest rates, and this is pretty interesting. Where Bernanke, he relied on what he called the portfolio balance channel. And the idea is that if the Fed holds short term rates at zero and depresses long term interest rates by buying treasury notes, then investors are forced to look elsewhere for higher yields. In doing so, investors will bid up the prices of stocks, which is what we're seeing: corporate bonds, real estate, emerging markets, and other assets. The result: gains in asset prices will provide collateral for loans to corporations and boost consumer confidence as gains show up in 401k statements. Okay, so there we go again. If you got some type of IRA, 401k, whatever it is, that you're making money on it, but do consider talking to someone about rolling some of that over into a precious metals IRA, because if the paper markets got your 401k up, those same paper markets are going to take your 401k down. So do consider having a look at that. Um, there's more he says, but in short, I'll just go to this last paragraph. In short, once the debt to GDP ratio exceeds 90%, additional spending impedes rather than stimulates growth. And our current GDP ratio, I think it's somewhere around 105. I could be wrong. So we're seeing this article from Zero Hedge saying 2024, we're going to just be paying interest. That's it. We're seeing Jim Rickards where he says once we're above 90%, which we are, additional spending impedes. So we're not getting out of this, and that's probably why we're going to be going back to zero and negative rates as a last shot to try and get out of this. And when we do take a look at the current inflation rate, I think right now and we're below, yeah, we're below 2%. We're at 1.6%. So was that a factor in the Fed cutting rates? Maybe, maybe not. Personally, I don't think the Fed is interested in something more than just the inflation rate. And I'll go ahead and talk about that a bit later. So I know the question is a lot of people they have is just exactly how do interest rate cuts affect consumers. So Investopedia, they explain it pretty well. So bear with me. We'll go over this. Where the Federal Open Market Committee, FOMC, sometimes we hear that word FOMC, of the Federal Reserve meets regularly, which is what they just did, to decide what, if anything, to do with short-term interest rates. Do stock traders almost always rejoice when the Fed cuts rates? But does a rate cut equal good news for everyone? Okay, the Fed lowers interest rates in order to stimulate economic growth, as lower financing costs can encourage borrowing and investing. That's true. However, when rates are too low, they can spur excessive growth and inflation, reducing purchasing power and undermining the sustainability of the economic expansion. Where there is too much growth, the Fed can then raise interest rates in order to slow inflation and return growth to more sustainable levels. And this is what they're trying to do. They're trying to cut rates to get a bit of inflation coming, and then they're going to have to put a throttle back again. So what exactly are they doing, right? I mean, it's you and me and our paychecks that are getting caught up in this. Uh, when the Fed cuts rates, this refers to a decision by the FOMC to reduce the federal funds target rate. The target rate is a guideline for the actual rate that banks charge each other on overnight reserve loans. So when he made that cut, I think we're at 2.25% now. This is a guideline for banks to charge each other on overnight reserve loans. Rates on interbank loans are negotiated by the individual banks and usually stay close to the target rate. The target rate may also be referred to as the federal funds rate. Okay, so now reading deeper into this, we see that it may not affect us in very very deep ways. It's more for banks, how they are going to loan to each other. Okay, so moving on, the federal funds rate is important because many other rates, domestic and international, are linked directly to it or move closely with it. Why does it change? It's a monetary policy tool used to achieve the Fed's goals of price stability, meaning low inflation, and sustainability or economic growth. Changing the federal funds rate influences the money supply, beginning with banks and eventually trickling down to consumers. Eventually, yes, it trickles down to us, but I think we can already see where when these things go on, coming off that gold standard or fiat not really being backed by anything, we see how they have to maneuver and manipulate not just the money supply, but inflation rates and everything else. Now, continuing on, the Fed lowers interest rates in order to stimulate economic growth. Lower financing costs can encourage borrowing, which is what they're trying to do, borrowing and investing. However, when rates are too low, they can spur excessive growth and perhaps inflation. Inflation eats away at purchasing power. I think you and I know that. The dollar since 1913 has the same purchasing power of just about 3 or 4 cents now. It's gone down. Purchasing power is almost gone, and it could undermine the sustainability of the desired economic expansion. On the other hand, when there's too much growth, the Fed raises interest rates. Rate increases are used to slow inflation and return growth to more sustainable levels. Rates cannot get too high because more expensive financing could lead the economy into a period of slow growth or even contraction. The Fed's target rate is the basis for bank to bank lending. The bank rates charged their most creditworthy corporate customers is known as the prime lending rate, often referred to as the prime. This rate is linked directly to the Federal Reserve's target rate. Prime is pegged at 300 basis points or 3% above the target rate. You and me, consumers, can expect to pay prime plus a premium depending on factors such as their assets, liabilities, income, credit worthiness. Rate cut could help consumers save money by reducing interest payments on certain types of financing that are linked to prime or other rates, which tend to move in tandem with the Fed's target rate. Excuse me. Okay, so here we go. You and me. Our mortgage. A rate cut can prove beneficial with home financing, but the impact depends on what type of mortgage the consumer has, whether it's fixed or adjustable, and which rate the mortgage is linked to. For fixed rate mortgages, a rate cut will have no impact on the amount of the monthly payment. You're just going to consistently be paying that one rate. But low rates can be good for potential homeowners, but fixed rate mortgages do not move directly with the Fed's rate changes. A Fed rate cut change in short term lending rate, but most fixed rate mortgages are based on long term rates, which do not fluctuate. Uh, All in all, a mortgage, if you're paying a pretty high rate right now, what some guys will do is they may go and I don't want to say refine, but they'll see if they can get a better rate for their home. People with adjustable rate mortgages or ARMs, they're gonna more than likely see a smaller monthly mortgage payment. So that's how it affects mortgage rates in general. In general, credit cards, the impact of a rate cut on credit card debt also expand or depends on whether the credit card carries a fixed or variable rate. Pay off your credit cards, huh? But for consumers with fixed rate credit cards, a rate cut usually results in no change. Many credit cards with variable rates are linked to the prime rate, so a federal funds rate cut will typically lead to lower interest charges. Okay, so maybe that can be in your favor. Um, Savings accounts. When the Fed cuts interest rates, consumers usually earn less interest on their savings. Okay, we're not happy about that, right? Banks will typically lower rates paid on cash held in bank certificate of deposits, money markets accounts, and regular savings accounts. The rate cut usually takes a few weeks to be reflected in bank rates. Okay, CDs, money markets accounts, money month. Okay, bottom line. The Federal Reserve uses its target rate as a monetary policy tool, and the impact of a change to the target rate depends on whether you are a borrower or a saver. This is how it's going to affect you if you're a borrower or if you're a saver. Uh, Read the terms of your financing and savings arrangements to determine which rates are relevant. Okay. Okay, so I think we get it. So it really depends. When a rate cut comes into play, if you're a borrower, it can be in your favor. If you're a saver, may not. It's probably not gonna be in your favor. So in general, these are the ways that it may affect us. But it at the very top level, it's more about banks lending money to each other. I guess we could say providing liquidity to each other or having reserves. It's really on the top level that's where it is. And then, as the article said, it trickles down to us as far as the effect on our mortgage, on our loans, and things like that. Okay, let me check what you guys have been saying. Get half your money out of fiat and go into gold or liquid gold B2C. Half money in BTC, that's a lot. I don't know. It's just a bit too volatile still for me anyway. But some of you guys might like that. Go ahead and take a chance. Why not? It's been doing pretty good. I think today it had a very good jump. Um. Okay. Thanks everyone. Yeah, there's a lot of good comments. Let me get back up. I buy vintage cars. No worries about stupid small check ripoff. Helpo Sanchez. Hey, you know what? I know the for the older cars, the parts are getting harder and harder and harder to find. So if it's just say like one of those old VW vans with the pilot windows and whatnot, I think what 68, 69, I forget the year. One of those, I think going electric would be a good thing for those. I mean, retrofit it out. You go ahead and go electric, and then you don't have to worry so much about trying to find carburetors and things like that. So I think there is some advantage. Plus, it's not a golf cart. I mean, electric retrofits today, it's you would never know that a car next to you on the freeway is an electric car compared to your internal combustion engine car. Um, let's see, easy to get part. Yeah, everyone looking for the windfall windfall bet. I get, yeah, everyone wants a windfall bet, right? We want to put in as little as we can and make the most of as we can. Okay. Okay. Buy some AGN ICO Eagle and call that nickel investment complete. Okay. Get hell. Okay, we read that one. Pat, right. 90 people on chat, but less than 20 thumbs up. Time to thumbs up. Okay, thanks, mate. I'll join in too. I'll okay. Um, thanks, God. Appreciate it. Josie, yes, the future is electric. Tesla disrupted the market. Yes, he did. We will need nickel, and guess who will get rich? Nickel. Josie, yeah. I mean, I know a lot of people they don't follow electric vehicles. It's not really on everybody's radar, and fair enough. If you're outside of the U.S., Europe, uh, China, I would suspect even Korea at this point, even Singapore, the electric vehicles are very much on the radar, and I think that's one of the differences. Like when we talk about electric vehicles, you get an ear, but when it comes to the states and you talk about electric vehicles, it's not mainstream. It's not a real mainstream idea yet, and fair enough. Where a lot of people may not be attuned or abreast of what's going on. Um, so it's just something that in time will start to unfold and play out. But we're about gold and silver right now, right? So we want to make sure we have that gold and silver. Rate cuts are not for us; they are for the banks. Of course, Elvo Sanchez is absolutely right. Um, Governments and banks, they are almost always on the opposite side of the citizens. So it's a tough deal. Okay, so we see these things, and then so the financialization, which is what Charles Hugh Smith said, that is happening. And I want to go back to one more thing, which Michael Pinto also said as well.
But when you get down to the real truth behind why they're lowering interest rates, if you really want to know why, is because they understand that if they don't maintain this 2% inflation target, that bank assets could start to go down again. That the housing market could start to crumble again. Stock prices can crumble again. Junk bonds would crumble, the price of junk bonds, and that would wipe out the banking system. So we're stuck in this hyperinflation of asset prices, and they're so petrified that things could correct, because if they correct, the leverage in the system is so great that if they even started to correct a little bit, that would turn into a massive crash very quickly. That's the danger. So they're out there trying to print and borrow and spend as fast as they possibly can. And I don't think that's going to end anytime soon.
So there you go. Keeping the asset bubbles inflated, that probably might be uh, the bigger priority than the inflation rate right now. So that goes into the question: where is the Fed more concerned about the inflation target, meaning their 2% or so target? Is that so important to them, or are they really trying to protect the asset bubbles, which I think it's more about? And I say that because the Fed is doing the same things. We'll go back to Bernanke. They're doing the same things, and they're thinking that lowering the rates is going to pick up the inflation, and it didn't, but it inflated asset bubbles back with Bernanke all the way through Yellen. And so here we have Jay Powell doing the exact same thing. Now these guys are smart, they're academics, so you got to ask, if they're doing the same thing and expecting a different result, that's not exactly the way to go about it. You need to change what you do if you want to get a different result. So being that they're not changing what they're doing to try and get the inflation rate up, I would say their priority is to keep the asset bubbles inflated. And I guess, as Pentel said, if those asset bubbles go, the bank assets bubbles go, that's it. We're really going to be in a downward spiral from then on. Um, so let's see. Converted Pastor of Carcarosa converted all my BTC into gold October 2017. It was getting crazy for me. My best payday considering I bought it at 87 cents You bought Bitcoin at 87. Okay, pretty good. Yeah, but at that time, what we saw was gold and silver was sideways. A lot of guys they weren't interested anymore in gold and silver. We did see a lot of people sell, or guys who would typically buy every month. We weren't seeing them as much, and we saw Bitcoin take off, and then started to go back down. And then what we saw were guys in Bitcoin and crypto. They were trying to find a safe harbor, and they found it in gold. So a lot of them started buying gold, and but to be fair, a lot of them were already in gold and silver, got out, took that money, put it in crypto, made more money there, a lot more, came back out and went back into to gold and silver, which I think is a good play. So we did see quite a bit of that. Um, Looking more at the questions, Fed is a private company. Abo Sanchez, they only care for their profits. Yeah, I think we need to remember that the Fed, it is a private company. I guess we could say that it is a private company. Um, a lot of people you still to this day they think the Fed is a part of the government. I had a uh, friend's son graduated from had a finance degree uh, at a university in Texas, and when I told him about this, he he didn't know. Nowhere in his classes, and he's a bright kid. Nowhere in his classes did he know the Federal Reserve was a private corporation. So I guess to this day they're not really teaching these kinds of things. Um, Shane Clemens, Glass-Steagall needs to be forcibly reintroduced to the banking system. Yeah, we saw Clinton repeal. I believe he repealed Glass-Steagall during his term, and that enabled the banks to go ahead and invest. I think typically before the regular the mom and pop banks, the retail banks, they couldn't speculate the way that they're doing now, or go into the markets the way that they're doing now. That was left for investment banks. But then we saw the mom and pop smaller banks get into that, and we know what kind of happened already with it. Um, yes, the Fed's a private bank. Fed is the biggest scam in modern history. Yeah, you could say that. Um, so the thing is, Jerome Powell did make his cut, and he went to a 25 basis point cut. And there was one reporter. She had a very interesting question about that 25 point basis cut that she brought up. So I'll let you see it. It's just a short clip.
Is there any reason to believe that a 25 basis point cut is going to be sufficient to expediently return inflation to your 2% target? And if not, what are you going to be looking at to convince you that you need to cut rates again? What is the hurdle rate there?
So I think you have to look at not just the 25 basis point cut, but look at the committee's actions over the course of the year. As I noted in my opening statement, we started off expecting some rate increases. We moved to a patient setting for a few months, and now we've moved here. And I think what you've seen over the course of the year is, as we've moved to a more accommodative policy, the economy has actually performed just about as expected with that gradually increasing support. And I think I wouldn't take credit for all of that, but I do think that increasing policy support has kept the economy on track and kept the outlook favorable. In terms of the rest of your question, the committee is really thinking of this as a way of adjusting policy to a somewhat more accommodative stance to further the three objectives that I mentioned, to insure against downside risks, to provide support to the economy, that those factors are where factors are pushing down on economic growth, and then to support inflation. So we do think it'll serve all of those goals. But again, we're thinking of it as essentially in the nature of a mid-cycle adjustment to policy.
JJJ, 25 point basis cut. I don't think you made a lot of people happy. I know when you did that, President Trump wasn't exactly happy with it. But what signal did the Fed give by cutting rates 25 basis point? Why didn't he just go 50 basis points? Um, well, I think if he went 50, that would have really rattled confidence for one thing. I think it would have shook the markets up a bit more, but I think it would have calmed down and party on. I think the markets would have seen more cheap money coming in and would have taken off. Um, he could have went 50, but I think the thing is, what we've been learning is it takes roughly the Fed needs to be at 4 to 5% in order to have enough cuts to handle a recession, because that's what it takes in general, about 4% of rate cuts in order to pull the economy out of a recession. And we started at below three. So if Powell were to go ahead and just give it the gas and put 50 basis points right from the get go, or cut 50 basis points right from the get go, he doesn't have much ammo left after that. So I think he needs to, kind of do his thing and give it some time and assess, and hopefully some things can turn around. But I don't think it's going to happen. I mean, the cat's out of the bag, genie's out of the bottle. I think we're going to tumble all the way down. We have the ECB already going negative, or talking more about going negative, I should say. And I think if they go negative and US goes to zero, where our economy would still be better relative to the rest of the world. But all in all, I think Paul can't afford to use up that much of his ammo by going 50 right from the get go. Um, cut was already priced in. Yeah, that is true. I think even Pinto had said the cut was priced in. Elbow Sanchez. Um, Pat Wright agreed. Good one. The end, Frank. The end is near for the Fed. Let's see what China and Russia next move. Well, I tell you what, I think Russia and China's next move. I think James Rickards had a pretty good thumb on what they're going to do. I might play that a bit later on. But one thing Paul also said was that it wasn't going to be a long series of rate cuts. So let me play this one for you. It's another short clip.
You've talked in this press conference about being data dependent going forward, and that this is not the start of a series of rate cuts. But the financial markets seem to think that this is the start of a series of rate cuts, and they're predicting 3, 4 cuts this year. Is this your effort to try to damp down that thinking?
Let me be clear. What I said was it's not the beginning of a long series of rate cuts. I didn't say it's just one or anything like that. What I said is when you think about rate cutting cycles, they go on for a long time, and the committee's not seeing that, not seeing us in that place. You would do that if you saw real economic weakness and you thought that the federal funds rate needed to be cut a lot. That's not what we're seeing. What we're seeing is that it's appropriate to adjust policy to a somewhat more accommodative stance over time, and that's how we're looking at it. What I said was it's not a long cutting cycle. In other words, referring to what we do when there's a recession or a very severe downturn. That's really what I was ruling out. I think if you look back at other mid-cycle adjustments, you'll see, I don't know that they'll be in the end comparable or not, but you'll see examples of these.
Okay, so Chairman Powell, not a long series of cuts. Why did Powell say that again? He doesn't have enough runway, and as some of you guys are already saying, the Fed was only raising rates because they needed enough room to go back down. So the thing is, if it is going to be a long series of cuts and we go back to zero, and I was writing some notes here, if I think if the markets would, they're going to take it as a zero is back in play, and maybe even negative come 2020 into 2020 after the re-election. I should say re-election after the elections. Maybe negative rates would come in. QE would start up at this time, and if no inflation, I think we're going to see debt forgiveness in some form, whether it's going to be student loans or whatever it is. Taking care of student loans. Sorry about that. I think we're going to see helicopter drops. Sorry, I'm just reading my notes here. That would probably happen maybe via vouchers, where you're going to get a voucher to, again, pay some of your mortgage or something like that, all in an effort to get the economy back up, to pick up some inflation. That's what the Fed is dying for, as well as keeping those asset bubbles afloat. Um, they could be even looking at retirement bonds, as Keith Weiner, one of our prior guests, he noted. Um, but I think IRAs are definitely going to change. The rules of the game for IRAs and pensions definitely going to change. But they are going to try and get money into the hands of the people. Banks are going to charge negative rates, which will mean you won't be able to save any of that money. You're going to have to spend it, um, use it or lose it. And I think at this point, people are going to be turning, besides to gold and silver to store the value of their wealth. They're going to be looking at cryptos as a place to park their money as well. I shouldn't say park, but when it comes to transacting, I think they will definitely be looking at crypto. But all in all, I think what's going to end up happening is things will be so volatile already at that point, even with crypto, where you probably will need some type of gold backed stable coin. Because if you're in crypto and things get too volatile, you're going to need to park it somewhere. And more than likely, that's going to be some type of a stable coin, probably a gold backed stable coin. But I think after 2020, I think we're going to see a lot of things start to unfold. But we'll see what happens with this. Um, oh, hang on, sorry about that. Let me turn this off. Okay, so Jim Rogers, Sean C. Jim Rogers forecasts since 6 years ago are fulfilling. People rush to the dollar, and it's the wrong place to stay. Yeah, I think we are going to see people rushing more and more to the dollar, and if they do, with negative rates on the horizon, they should be prepared that they may not be able to hold those dollars as much as they thought they could or would. Pablo Pino, Powell must change his mind now that Trump slammed China with tariffs. Yeah, some people are saying that was Trump's insurance policy, that Powell will have to continue to cut rates. That was, some people think that was a play that Trump did. Lower rates, Pat Wright, lower rates stimulate mortgage refinances and dollar velocity. Pat Wright, true, and that's what they're really trying to do. They're trying to get us to spend. They want us to put the money back in the economy, but we're not going to do that. We're going to put the money into gold and silver, and we're going to keep it on the side, and we're going to keep that out of fiat, store wealth, and when all of these things come into play, we're going to be doing a lot better than if we had just stayed completely in fiat. So you and me, I know you guys out there, you're not buying it. When the Fed starts to shake that tree, some leaves are going to fall. Others, like you and me, we're going to just hang on to that tree. We're not going to get shaken off. We're going to still continue to pick up our gold and silver, because we know it's not just the investment side of it that we're looking at. We're looking at the insurance side of it. So you and me are not going to get fooled by this. We know the right things to do. It's just a matter of time. Um, Elbow Sanchez, dollar's the prettiest of the ugly sisters. Yeah, that, that is true. The Powell jaw is so full of BS. Beware of Jawbone Jerome. Jawbone, Jawbone. Okay, I got to remember that one also. Jawbone Jerome. Let's see. Joey Vargas. Does anyone else see crypto as a mark of the beast system? I'm chuckling here. I'm laughing here a little bit because, man, if I could one day tell you all of these things that I think about it, it'd be amazing. But there are some guys who will say that it is. Um, I'm not going to say if one of them is me or not, but you can see uh, the doors that are open for it to possibly be one of the things. Anyway, so we'll save that one for another day. Might have to get my own channel to discuss that kind of stuff. Huh? Anyway, um, exactly. Are you talking billion? Yeah, we're gonna banks are gonna have billions. I mean, I think we go back to 2014. We already saw in when they met in Brisbane, Australia. They the G20 pretty much authorized billions for the banks. If they need to take your money, they're going to take your money. And the scenario I see, I mean, I could be wrong, but the scenario I see, they will take your deposit, the billion, and you're going to go to the bank and you're going to tell them, hey, I want my money. I'm insured up to $50,000, $200,000, whatever it is. I'm insured. Give me my money. The bank is going to tell you, okay, you're right. You are insured. Please take this form, fill it out, and we'll get back to you later. And then what are you going to do? I mean, legally, they're still abiding by what they're supposed to do, where you're insured, but in the process, they're going to tell you fill out a claim and we'll get back to you. So what do you do then, right? So again, this and with negative interest rates possibly coming up, we should consider other things besides the bank. Um, I think that's just the way things are going to be. Uh, G man, gold and silver, God's money, fiat inherently worthless. Crypto relies on faith too. Yeah, I'd have to agree with that. Everything will be tracked soon. Yeah, Wolflow, I tell you what, I think everything is. Um, for the most part, I think just about everything is tracked. I mean, I've even seen where people they've turned off their phones, and Google still knew where they were. So I tell you what, it's going to be. I think it's going to be hard to avoid the system when they really start to wrap their tentacles around everything. Hong Kong plunge protection team kick in. Yeah, Hong Kong they got a lot that's on their plate right now. Um, a lot, a lot. We're gonna have to see how that unfolds as well. Josie, helicopter money will only boom the commodity, especially gold and nickel. Uh, hey, silver too. Don't forget silver. Can nickel beat the historical high? You know what, Joe? My opinion. I'm a bit biased, but I think it will. I think it will handily beat its all time high once really the um, EV adoption rate, electric vehicles adoption rate starts to kick in. Right now, it hasn't really kicked in, but we are seeing countries building up the infrastructure where they're creating more electric chargers. They're working on the grid, the power grid and things, and a lot of countries do have mandates where by this date we want so much of a percentage to be of new car sales to be electric vehicles. And I think that's when the adoption rate starts to kick in, and that's when companies they need to physically put those metals into the batteries, the nickels, the class one nickel. But I think from now till then, what we are seeing is countries are trying to align themselves, or car makers, I should say. In some countries, they're trying to align themselves in getting nickel supply, because they know that in the few short years ahead, it's going to need to be online as a product in a car and on the road. So between now and then, I mean, I do think, of course, you're going to have its ups and downs, but the adoption rate it can only start to go higher and higher and higher. So for that reason, very, very, very bullish on nickel. I think nickel is going to do extremely, extremely well. Um, Barter is not tracked. It's legal evasion. G. Bob's burner. It's legal tax evasion. Yeah, I tell you what, barter it's not tracked. That is true. But I don't think it's really tax evasion in that sense. Um, I mean, I guess it depends how technical you might want to define tax evasion. Um, but I don't know. I mean, I've also heard stories where, even just plain old garage sales, there are states who are trying to uh, either outlaw them or make sure that they're taxed. So, me, who knows? Who knows where that's going to lead? Um, Rogue Silver. I don't keep a dime in the bank. I pay for everything in cash and the rest in PMs. Don't anyone don't need anyone to hold my money for me. Not going to have the bank tell me I can't have it if they fly up. Rogue silver, absolutely. I tell you what, I'm right along the same in that same zone with you. I don't believe in banks. A bank to me, it's I mean, it has its purpose, of course, but I just tend to not want to deal with the bank if I really don't have to. So I understand where you're coming from. Joey Vargas, any thoughts on copper? Is it worth stalking as well? Copper, it's I think it depends how you're gonna play it. I mean, getting physical copper, you're looking at storage, of course. I mean, copper takes up it's gonna take up a lot of space, but I mean, there is this phrase called the electrification of everything, meaning things are going to change. Construction, new homes, you're going to see them. New homes you're going to see being built with electric power bank walls, where you're going to see solar kicking in or providing power to those batteries providing power to the house. Of course, you still need some power from the grid, but all of these things, they're going to use a lot of copper. Even electric vehicles, they're going to use a lot of copper. And I think as the world tries to go green, which is where they're headed, things look like they're going that way. You're going to need copper. You're definitely going to need more and more copper. So I think in time, same with the adoption rate of electric vehicles. When this so-called adoption rate of the electrical or the uh, electrification of everything, as they call it, I think you're going to see copper moving pretty good as well. Um, Nickel is capital intensive mining business. It takes 10 years to add a new nickel mine to production. Josie, yeah, you're correct. We hear anywhere from 7 to 10 years, and that's why a lot of guys are looking at the adoption rates for EVs and the government mandates of when these EVs are supposed to come online. They're looking at the copper or the nickel supply, and they're seeing that it is going to be tight. And remember, not all nickel can be used for electric vehicle batteries. It has to be class 1 nickel, which is roughly about half the supply of nickel mined. So, yeah, I think we're going to see some moves with the nickel price. Um, let's see. Hey, yes, all the signs that we woke up the sleeping giant. Okay, bond yields are taking a dive. 10-year almost 4%. Oh boy, a lot of solar panels polite a lot more than with nuclear. Yeah, the technology in solar panels. It's it's changing. It's growing. We had the big panels that you put on the roof, and now we're even seeing Tesla. I think it was Tesla coming out with roof tiles that are solar panels. So they actually do look a lot more nice. But I know he had a big presentation on it, but I haven't seen much more than that. I haven't quite seen the adoption, but I think overall we will. Whenever it comes to new homes, I think you're going to see some type of solar roof tiles. You're going to see power bank walls in the garages. I think you're going to see a few different things that are changing. So we'll see how this plays out. A good place to stack your silver in all electrical wiring in your house. Yeah, just go ahead and get some PVC pipe, cut it, to fit snugly between a sink and the floor or a panel and the floor, and nobody will ever know. Just go ahead and put your gold or silver coins in there, or don't forget, you can also get Pez containers. They hold 1 gram gold bars very, very nicely. So don't forget those now. And but okay, so I think that's where we're at. We've seen the interest rate cuts. I think we're going to see more. Um, uh, the question is, will we get to zero? I mean, I think we're going to get to zero after the 2020 elections, but the question is, are we going to go to negative? And I think that's going to be on a lot of people's minds, because if we get there, I think we're going to see a lot of the modern monetary policies coming into place, where you're just going to see debts being wiped out. You're going to see people getting money, all in an effort to stimulate that economy again. Um, I think things are really getting I'm not going to say desperate, but it's it's in the yellow. You know, you got your green, things are good. Your yellow, have some caution. Your red, it's warning. I think we're still in the yellow, but let's see if we can turn things around, and hopefully things will. So I think I'll end it there with this week's live stream. I hope we all picked up some a grasp of interest rate cuts and what they mean, how it can affect us, what we should be looking for as we see the world, the rest of the world, already heading to it. Um, Talked a bit about EVs, electric vehicles. I think it's good that you folks are aware of it, especially nickel. But main thing, as I always say, get your gold, get your silver. Um, we are going to go through a transition. There's no doubt about it. The current monetary system cannot last. There will be a new monetary system. So be sure you have that gold and silver to store your wealth, to possibly get some opportunities for you during the transition, and to get through that transition. Doesn't have to be all bad. We can take the right steps and prepare for it. So go ahead. Be sure to get some gold, get some silver, uh, diversify your assets, diversify the location of your assets, and diversify your skill sets. The 3D approach to getting through what's probably going to be coming up. So, you guys, you all take care. I appreciate you all being here. God willing, we'll see you again next week. And until then, just always remember to saddle up, be ready for what's coming ahead, and silver up. I'll see you guys next week. Take care.